we all have, we're all incentivized to say that, aren't we?
Right.
I don't think, again, in professional services in particular, where there's creativity is important, strategy is important. I mean, we're way out over our skis in terms of what AI can actually do.
And when you're in a niche industry like we are, ultimately, a lot of these models or all of these models are trained on the data that's out there, right? Our industry is pretty niche. I don't think there's a lot of training material for it to train on, at least.
Yeah, and I shut that stuff off, like even with the programs we use, like Google Suite, make sure that Gemini's off, because I don't want to teach them either.
Right, exactly. Yeah,
I want to feed these guys all out. Like, these are proprietary processes that, and we've all, you're in legal industry, we're in the banking industry, we spent years investing ourselves in learning our trade, continue to learn our trade. I mean, why would we just toss that and give that to somebody?
Yeah.
Welcome to the Payments Experts Podcast, a podcast of Global Legal Law Firm. We hope you enjoy this episode. And our special guest, we got Adam Hark with Wellesley Hills Financial. Adam, it's a pleasure having you in the studio. We're a big fan of what you guys do over there. Welcome.
Thank you very much.
Yeah, welcome, Adam. Usually I like to start these podcasts out by getting an understanding of who we're with. So can you just let us know how you got into this space? Because everyone has a really unique story from what I've learned. Like, I've done a couple of these, as Jeremy said now. And I'm realizing everybody has very unique stories of how they got into payments. So I'm just kind of curious how you got into this industry. And from there, if you could tell us, what your role is at the company and what the company does as a whole.
Sure. So, if I'm going to be very frank about it, I kind of fell ass backwards into payments and investment banking at the same time.
Right.
I originally teamed up with a relative of mine who was working for a merchant acquirer. This is circa 2006, I think. I'm based out of Boston. This relative was, and the acquirer was, a small publicly traded OTC company, and their business model was inorganic growth. So they would bird dog portfolio deals and residual deals, and that's how they grew their company. And after that, it ultimately became my partner in my first business. He had observed internally, working as a salaried person, that he was doing a lot of the M&A work. He was identifying the targets and all this, and then at the consummation of a transaction, in walks the investment banker and walks out with multiple six-figure payday, and he's like, okay, something's not right here. Right. He had the idea at the time I was looking for a career change, and we just it was so niche, that merchant acquiring payment processing space. Like, you couldn't help but think there was some opportunities there, especially given that what was super interesting, most of the transactions were not enterprise. They were asset transactions. So people are trading, they're buying residual streams, they're buying portfolios, they're portable, they're not portable. And it's happening all the time. And there wasn't at the time really a well-established intermediary who was brokering those transactions, representing whether it's the buyer or the seller. And so we saw a lane and we ran in it. So I cut my teeth in banking and in payments in the merchant acquiring space with the processors, working with ISOs, sponsor banks. And over the years, I don't know how much you want to, I can run you up all the way to
however
now.
Much you want, yeah.
Yeah,
it's always
you may have to edit it out, but
it's always interesting to know. Yeah,
yeah, it is.
Because
the more detail, the better. Usually,
okay.
Yeah.
Okay.
One thing we've noticed is, in similar, how it's funny how your story is starting out the same way. Is people just keep finding themselves in this industry. It's not that they sought it out.
People fall in all the time.
Every time I interview someone here, they always fall into it. It's never like, and same for me. I didn't become an attorney in payments knowing what I was going into.
It's a really, not purposefully, but it's an opaque industry. We as consumers, all we know about payments is that it either works or it doesn't.
Right.
Exactly.
That's all we know.
I never thought about surcharging or this or that.
Pull back the curtain, man. And there's so much going on. There are so many different participants in the ecosystem. Yeah. It's wild. And so that's how I fell into investment banking. That's how I got into the payment space. Over the years, we flattened out the practice to appeal more broadly to financial technology, all the species they're under. And fast forward to 2020, in comes a pandemic, blows out whatever our pipeline was at the time. There's nothing, and the reason why that's relevant is because there were no deals in the offing to keep myself and two of my younger teammates. I think Anthony's been here on a podcast before. Shavang's back in the headquarters in Boston. There was nothing pinning us in anymore. And what we kept bumping up against as advisors, M&A consultants, doing investment banking work was the fact that we weren't actually an investment bank. And that created a constraint for us because we had developed this expertise in this really niche area of financial services. And, the biggest groups out there, from publicly traded companies to financial sponsors, private equity groups, they would come to us, so we could analyze what they were doing, if they were looking at these types of assets and wanted to acquire them or build one, et cetera. But, we would respond to requests for proposals, and bid on engagements, and it'd be investment bank, consultant. You got DQ'd right away. So it was really frustrating for us. And then when the pandemic came in, blew up the pipeline, it interestingly created an opportunity for us because there was nothing pinning us in. We're saying, you know what? We're going to do it. So at the same time, we stood up Wellesley Hills Financial, which is the operating company, the one that the market knows. I stood up Wellesley Hills Securities, which is our broker-dealer. So now we registered with FINRA, and that really opened the doors for us because now, 70+% of investment banking is raising capital on behalf of companies.
Sure.
It's not M&A. And it just opened the doors, and we've been running. We ran through them, and we've been running ever since. So that's kind of the background. Today, as we're currently constituted, we have that payments practice is still probably 30 to 40% of our business. Then there's fintech across the board, and then we have a burgeoning B2B software practice internally as well.
It's really cool. One thing I wanted to ask you, and it's something I like to ask a lot of our guests, because I'm kind of like I don't know what you want to call it, like an AI nerd. I'm really interested in how AI is impacting society in all sorts of industries. So we'd love to get your take on, are you seeing AI impact what you guys do? If so, how? And are there any challenges front and center for your guys' clients that are maybe being resolved by AI? Just kind of walk us through that and what you're seeing, because that's a big
topic.
Of everything now.
It's expansive. I can approach the answer in two ways. I mean, one is what are we seeing as it relates to our clients in the payment space? I think the answer to that is fairly straightforward at the moment. I think it has immediate value to companies as it relates to repetitive tasks and automating them.
Yeah, agentic AI, right? I believe that's
even generative.
Generative, okay.
I mean, I think agentic is still, everybody's talking about it. It's all over the place. I think, you said society, I think everybody's a little bit out over their skis on this. There's a big difference, whereas generative, you're prompting it, and it's based on Bayesian reasoning, which is statistical, so the past predicts the future. That is what I think people are using now. They're prompting these massive LLMs, and they're getting outputs, and they can do stuff that they would have normally had, hire person, like real humans.
Right.
And bang, it pops out, and there's efficiencies there, clearly. As it relates to our practice, that's really interesting because, getting back to the expertise that we've kind of honed over the years in payments, there are certain analyses, especially KPI analyses, valuation work that, you can't get at other places. You're not going to get it really at a lot of consulting shops that aren't banks, at the true middle market banks. They have fintech divisions or payments divisions, but really what they did, they parachuted in, bankers, and they said, okay, you're in the fintech spot, but they don't have that background or that expertise. So there's some really niche things. One of the places that we're looking at AI implementation specifically is in or with the processing of the massive amounts of data that the processors kick out, which basically define what a portfolio is worth and feeds or informs the financial model that tells you what the business is worth.
Just to jump in real quick on that point, I'm curious, how are you guys handling AI hallucinations? Because just for an example, we've had clients come to us and be like, hey guys, we use, let's say it's ChatGPT or Google Gemini to draft this contract. Can you take a second look? And when we look, we have to completely redo everything because they don't actually know what they're looking for. Right. So what they see to them sounds like a good contract. I take their 1-page contract, turn it into an 11-page contract that has all the bells and whistles, that has everything that they didn't know needs to be in there. And when I looked at their contract, it cites to provisions that are not actually, or cites to laws that don't actually exist, for example. And they're like, they don't look. And I'm just wondering how you guys handle your hallucination, with the AI.
So what we're doing, excuse me, we're currently working on a project with the University of Toronto.
Oh, wow.
We're working with an AI team at the school. It's a joint venture.
That's cool.
We're doing it through one of our executive advisors, Michelle Bayo, who based out of Canada. It's a collaborative effort. We're feeding them the data, and they're supposed to be basically simulating the analyses that we would do internally.
Okay.
And again, this goes back to fundamentally, processing these massive data files, the raw data reports that the processors kick out on the merchant level activity, whether it's for the ISO or for a bank, et cetera. And it's not so much I wouldn't say it's a hallucination issue. There's a trust factor here. Mm-hmm. So where we are in the project is we're really trying to determine, to what degree of accuracy the outputs that the model that these kids are working on with an AI program are to what we would come up with.
Right.
And to answer your question, perhaps more bluntly, as much as I find generative AI an extremely useful tool, to me, it's still stupid.
Agreed.
This is not smart AI. Smart AI is deep learning. Okay, that's when you get into the agentic stuff where, it's actually, you're not prompting it. It's looking at data, it's finding patterns, it's processing that information, it's drawing conclusions, and then it's acting on it. That's different. I mean, right now we're still in the generative universe. And so I think it's really important that you have that human oversight. You cannot send something out the door
100%,
that's something that kicks out of a model.
Yeah, and I always tell a lot of clients,
you'd be
same thing.
negligent.
Yeah, if you're going to use it without us even looking,
you can use pieces of it,
Yeah,
but
but you have to verify. And one thing I try to explain to people when I'm trying to kind of explain what AI is in a simple way is the way I view it. Let me know if you think differently. But for generative AI specifically, I kind of just say, hey, it's like a word predictor. It predicts the next words.
Yeah, I mean that's exactly what you're doing. You're prompting it, saying, "Hey, listen, find an answer that would map to this input,
right,
which is the prompt or the question," and it kicks it out based on, again, it's Bayesian, it's statistical. So it's just saying, there's a 90% chance that the answer should be this.
Right.
But it's not 100%.
Yeah, and it's not verifying it.
Yeah, and I think if you're, especially if you're in the professional services industry like you are and we are, you can't just kick that out the door and say, yeah, this is what here we go. And I think clients too want to know or make sure that there's someone eyeballing these outputs before it gets kicked back. Because I mean, if you told me, and I'm sure there are AI lawyers out there now. I don't know.
Oh,
I mean,
sure.
they're doing document processing and all that kind of stuff.
I'm sure now.
That doesn't give me the warm and fuzzies.
Right.
I don't want to. I feel like I'll be back in court for something.
Yeah, no. I'm definitely. I don't think it's at that stage where I would be comfortable doing that at all.
Yeah.
There was one I didn't really look into, but I remember a headline like a PI AI attorney. I'm like, I don't know. I don't even know how that passes any sort of like ethics standards. How do you go to court with that? I don't really get how that works. I don't know. I don't want to know. Yeah.
But I mean, I think it is effective in doing, it can take like 70% of that heavy lift, do that piece, and then you can fine tune it with oversight and just kind of back testing to make sure that the outputs are they're coming out where they should come out. If we did, a real human did it.
That's really interesting.
It really is. But what I'm hearing you say, Adam, is in essence, we're not at risk of our jobs being taken over just yet. Not yet.
Well, I mean, listen, we're all incentivized to say that, aren't we?
Right.
I don't think, again, in professional services in particular, where there's creativity is important, strategy is important. I mean, we're way out over our skis in terms of what AI can actually do.
Yeah. And when you're in a niche industry like we are, ultimately, a lot of these models or all of these models are trained on the data that's out there, right? Our industry's pretty niche. I don't think there's a lot of training material for it to train on, at least.
Yeah, and I shut that stuff off, like even with the programs we use, like Google Suite. make sure that Gemini's off because I don't want to teach them either.
Right. Exactly. Yeah. No.
I want to feed these guys all out. Like these are proprietary processes that, and we've all, you're in legal industry, we're in the banking industry. We spent years investing ourselves in learning our trade, continue to learn our trade. I mean, why would we just like toss that and give that to somebody?
Yeah. Just to one of your points, Jeremy, yesterday I was reading an article. So Google just released their latest Gemini 3.0 model, which is crushing all the benchmarks.
Right.
In terms of job losses, right? Radiologists, there's this exam for radiologists where they, take a look at the scan and whatnot. The average radiologist that was part of this study scored, I want to say like 81%. Gemini 3.0 now scores somewhere around like high 50s, low 60s. So they're bridging the gap. The last model was in the 20% range.
Wow.
And that's, so we're really bridging the gap on a lot of these things.
And that's probably one of the best use cases there for generative because, I mean, you think about a doctor, what they're doing is they're processing information from what they see, from what they hear, from tests, and they're making a prediction based on it. And it's probabilistic.
Yeah, you feed it the scan, you run that scan against thousands of others.
They're not 100%. They're never 100%. Well, I mean, hopefully they are. But I mean,
we would wish.
We would wish. I mean, I would expect AI at some point to exceed the human capabilities to, in prognoses and whatnot.
Yeah, I could go on this topic forever, but just sticking kind of with payments and what you guys do.
Yeah, we just wanted to help.
Right. What kind of challenges are you seeing, let's say in the immediate to, short-term future for your clients, the industry as a whole? Anything that's coming up across your radar that you're thinking?
I think there are two things. I think, making sure that good companies are well capitalized is a constant challenge. And I think payments, again, maybe a victim of its own specialization because a lot of lenders out there, whether they're bank or they're private credit funds, still have a lot of difficulty getting their heads collectively around the business model. If they're lending, what is it secured against? How much risk there is there? You know about this because a lot of that risk is baked into the contracts, which doesn't map to, they understand SaaS model recurring revenue. Because, here we got, software company sells to a business, there's a contract in place, the business pays X amount a month.
Yeah.
Okay, payments processing is different. Yeah. It's variable.
And so many different industries are implicated.
Yeah,
they don't think about.
So I think that's a challenge that persists. And then I think on the technology side of things, and I think this, this is AI, this is now crypto, I think people are struggling to understand where they're going to be, what their business is going to look like, what the world is going to look like 3 years, 5 years from now.
Yeah.
And I think...
What do you mean by that? Are you saying digital is going to replace fiat, or are we talking...
I think there's a place for all forms of money. I'll say that. But I mean, I think there's like this... It's in the it's infecting the psychology of founders right now that they feel pressure. Okay, how are we going to use AI? Yeah, and I think a lot of them panic and they look for an AI solution without actually understanding the problem that they needed to solve. So, and I think that's distracting and disruptive to the core business. Crypto, I think. Completely different technology, but I think that's also, has creeped into the mindset of the founder in the payments space. How is this going to affect us? What do we need? Are we prepared to provide our merchants with everything they're going to need, in the next 3 to 5 years as it relates to payments acceptance?
Yeah. So that's perfectly ties into what I was going to ask you. Before this podcast, you brought up, JPM and then base network. We're talking stable coins, all these things. I'm going to need your expertise on this because I just had a little bit of time to look into that. But correct me if I'm wrong. What I understood was, JPM released this base network for tokenized deposits. And just from my kind of brief look into this, it almost seems like, is this going to undercut the Genius Act and the utility of stable coins? Because with stable coins, you can't get interest off of them, but with these tokenized deposits, you can. So why even use stable coins? That's kind of how I saw it.
So a couple of things. So stable coin to me, it's here. It's not going away. It is going to be part of the future. It already is. It's part of the now. That's just the way it is. What I think is amazing, just from a high level, is just the speed at which, the technology is evolving, along with the regulatory regime, along with the use cases, along with demand, all different segments. I was doing hosting. I was a moderator at a panel in New York City about a month ago, and that was on stablecoin. And I was making a case, not just for, everybody talks about the B2B cross-border, which is so objectively, as it relates to stablecoin, is an objectively better solution. With one caveat, it doesn't have the throughput yet that the Swift system has. I don't think it can handle the amount of transactions. But I mean, the technology itself, there are still intermediaries there, but a lot less of them, which is what reduces the time. And when you reduce the amount of intermediaries, you're also reducing, theoretically, the cost. Right. Great. But there is a case to be made for the B2C at some point, especially as it relates to big retail, like the Walmarts and the Targets and the Home Depots of the world, who make up maybe 60, 70% of all card transactions, that are running on Visa and MasterCard.
Wow.
A big retail. So, but just between that point in time, which was roughly a month ago, and now, the JPM Morgan press release that came out 2 weeks ago, with their not a stablecoin, so it falls outside the purview of the Genius Act, which is fascinating in and of itself, because now you're talking about it is a tokenized deposit. So if I'm a corporation and I have money in my bank account, it's essentially now. I still haven't figured out the mechanics of this, like with granularity. But as I understand it, it's interchangeable. So, and then the big, and I read this press release 3, 4, 5 times, because I'm saying to myself, I think this is like a really big deal, and nobody's talking about it.
You were the first that I haven't heard of it until you raised this. Yeah. And I was like, wow, this is huge. And this
nobody's
is really
talking about it, because it turns, to me, it turns the whole stablecoin business model potentially on its head. Because here you have these non-bank issuers who generate revenue primarily from yield. From the securities that are backing the coins. Now, if I think about if I was a corporation, I have my accounts at JP Morgan, and I have, at least 2 accounts. I have an operating account and I have a money market account. And even for a small company, you can do basic treasury management where if you got a balance in your checking account, you're switching it into your money market, you're getting yield back and forth into the checking when you need it.
Yep.
Okay. Why would I ever take money out of my bank account and convert it to, let's say, USDC?
Right. Which you can't get
where I don't get yield on.
No yield, yeah.
Why would I do that? Now, in JP Morgan, they have 2 networks that they're operating. So the base one, I think, is some sort of joint venture with Coinbase. That's a Ethereum level 2 solution. What's relevant about that is it gives JPMD their deposit tokens access to public blockchain. And then internally, they have a Connexus network, which is their own proprietary permission network. So you have to be in the JPM network to have access to that, have a wallet and whatnot. But you get all the benefits of stablecoin without having to give up yield, which to me is a game changer.
Yeah.
And I'm very surprised that, the financial media, the pundits that we typically, listen to on LinkedIn and everybody, it's almost like they're whistling past the graveyard on this one. And I was just scratching my head. I was like, I'm not sure if they understand this is the biggest financial institution in the world.
Right, yeah. When he brought that up, I started looking into it. And like I said, just briefly, but just from that brief review, I was like, wow, this is huge.
Wow.
And
I think it's a big deal.
I'm curious how you think, because you just said it's a game changer. If you just had to, a really short, condensed version, game changer how? Like, what do you think is the biggest change
because
that's gonna come as a
the
result
biggest
of this?
concern, the reason why, when they did the Genius Act, that, they legislated it in that, private third-party issuers couldn't share the yield, was to protect the banks. Because they didn't want the banks wanted to make sure the deposits stayed placed. They didn't want money flowing out of deposit accounts, which they need to do their primary, business, which is lending. That money has to stay there. So they didn't want it flowing out into private stablecoins. That's why, they legislated it in that banks can't share yield. So now you get this tokenized deposits, which falls outside the scope of the Genius Act because it's not a stablecoin.
I wonder if this is going to prompt other companies to start doing this and doing partnerships.
Well,
with
that's, I don't know if
Coinbase
it's
and
an
whoever,
exercise in reductio ad absurdum, but you're thinking about like the small, tiny financial institutions, the banks out there. What is it? Bank of North Dakota put out a press release or something like that. Maybe a month and a half ago that, what was it, the Buffalo coin or something?
They all got
Buffalo
coins
Bill.
now.
I don't know.
Everyone has a coin.
Right,
Well, that's what
exactly.
I'm saying. But I mean, if you think about smaller financial institutions, I mean, the biggest threat to them with stablecoin, again, is outflows. Okay, if they lose a deposit base, they lose their ability to lend.
Right.
So imagine them being able to keep there's no need to go outside for to convert deposit funds into a private issuance like USDC or Tether or something like that. It's a great solution. Now that begs a whole bunch of other questions as to banking core capabilities now, and I think that's also why you saw Fiserv and FIS jump right in the ring, kind of at the same time as Genius or right before, right after it passed, because people sometimes forget they're not, a lot of people in our space think of them as acquirers. Okay. They're banking core technology providers.
Right.
Thousands of banks run on Fiserv and FIS cores.
Yep.
So it's natural for them to have to address this. I think they came right out and they said, we're going to address this, which they had to do. I'm not sure exactly how they're going to do it, but all banking cores in the future are going, listen, every merchant on the planet is going to have a routing number still, a checking account number. What's different is now they're going to have a wallet address. That's the future.
And I want to end it off with two things. One, I don't think you told them where they can reach you, like the specific email or specific contact info. And two, something I want to start doing with our podcast, Jeremy.
Yeah.
At the end of each podcast, I want to ask the guests one thing they're looking forward to.
Nice.
So either it's a trip that's coming up, I don't know, if a good movie you're going to go watch, whatever the case may be, just let us know one thing you're looking forward to in the near future.
Okay, so as it relates to contacting myself, I think the simplest way to do it is just find me on LinkedIn, Adam T. Hark, Wellesley Hills Financial, because we kind of have a long domain name.
LinkedIn's probably the easiest.
It's too easy to misspell.
And
Or
I'll
reach out to us, and we'll give you his contact, whatever the case may be.
And in terms of things I'm looking forward to, this is a very selfish thing. I love being right.
All right.
So I want to
cool.
see in the next 12 months, where we are at the end of 2026 with stable coins.
No, it can't be work related. It's got to be a personal thing you're looking forward to. I got to cut you off there.
Oh, then it's personal. I want to be right.
Yeah. All right.
No, I think for me personally, I take a lot of. I'm a builder.
Okay.
When people, especially people applying for like an internship or something like that, they say, "Why did you get in this business? What is it that brings you into the office every day? What is it about your personality?" I said, "I like building things, and I like doing it with teams and my teammates, and I love my teammates. I love what we're building, and to be able to continue that trajectory is extremely fulfilling and rewarding, and I'm looking forward to that."
Cool.
That's great.
He's still tied it to work, but we'll let it slide.
Yeah, absolutely.
He's a worker.
Yeah, no, it is. It's a great answer. Adam, it's been a real pleasure having you on the podcast. Thank you for listening to this episode of the Payments Experts Podcast, a podcast of Global Legal Law Firm. Visit us online today at globallegallawfirm.com. Matters discussed are all opinions and do not constitute legal advice. All events or likeness to real people and events is a coincidence.